Now let's talk about some example use cases. Let's take 4 key capabilities of blockchain for business and see how they fit into some practical industry use cases. Here is the first use case that talks about sharing routing codes that addresses the benefit of consensus. What is the use case? In any industry, competitors or collaborators in the business network need to share some reference data like bank routing codes. As of today, each member maintains their own routing codes and forwards changes to a central authority for collection and distribution. How does blockchain solve the problem? Every participant in the blockchain network maintains their own codes, and blockchain creates a single view of the entire dataset. Finally, what are the benefits of blockchain consensus mechanism? Blockchain consensus mechanism provides the benefits of a consolidated, consistent dataset with reduced errors. It provides near real-time reference data and the flexibility for participants to change the descriptions of the assets they own. Now, let's talk about the second use case that addresses provenance in aircraft vehicle maintenance. It is really very hard and complex to track provenance, which is origin of each component involved in aircraft vehicle maintenance. There are different manufacturers, different production dates, different batches, and even different manufacturing machine programs. How does blockchain address or provide solution for this use case? Blockchain holds complete provenance details of each component part that can be accessible by every manufacturer in the production process, that is, aircraft owners, maintainers, and government regulators. What are the benefits? Because no one particular member or participating member owns the source of origin for information contained in the shared ledger, blockchain technologies lead to increased trust and integrity in the flow of transaction information among the participating members. It provides improvement in system utilization, and recalls can be made to specific part rather than cross-fleet. In the third use case, let's take a financial ledger and talk about immutability. Financial data in a large organization is dispersed throughout many divisions and geographies. It is really very hard to have the pristine version of data available across these divisions. Audit and compliance needs an inedible record of all the key transactions to track fraudulent activities. How does blockchain provide the solution for this use case? Blockchain collects all the transaction records from diverse set of financial systems. Once entered into the blockchain, the record cannot be deleted or updated. Blockchain provides append-only and tamper-proof quality that creates a very high level of confidence for the financial audit trail. It also provides privacy features to ensure authorized user access. What are the other benefits? Immutability mechanisms of blockchain lead to lower cost of audit and regulatory compliance with improved transparency. And because contracts executed on business networks using blockchain technologies are smart, automated, and final, businesses benefit from increased speed of execution, reduced costs, and less risk with timely settlements of contracts. Here is the fourth key use case that we see in our day-to-day life. Finality use case that talks about letter of credit. The picture represented in the use case is self-explanatory. Anyway, in this use case, there are multiple participants, buyer, seller, and their corresponding banks. Every time buyer purchases some goods from the seller based on their sales contract, their banks need to issue a letter of credit, bill of lading to complete the funds to transfer. Bank handling letter of credit want to offer them a wide range of clients, including startups, but they're currently constrained by the costs and the time to execute. How does blockchain address this issue? Blockchain provides a shared or common ledger for the letter of credit that allows all the counterparties to have the validated record of transaction and fulfillment. Blockchain-based shared ledgers can help businesses save time, sometimes less than a day, and costs while reducing the risks, sometimes currency fluctuations. Additionally, blockchain technologies promise improved transparency among willing participants, artist automation and ledger customization, and also improve trust in record keeping. Blockchain also provides other value added services, for example, incremental payments. We saw key sample use cases in our previous slides. Blockchain technology can also be used to solve other important use cases too. Here are a few other potential use cases from different industries where blockchain technology can help. Let's start with securities industry. The blockchain vision will definitely bring a massive change to the structure of capital markets. It definitely can provide a lot of benefits to this industry in the segments of pre-trade, post-trade, and securities servicing. This technology can help in trade settlements, mainly the near real-time settlement process would have major implications for trading companies, particularly market makers and high-frequency traders. This technology can also bring a major impact to the derivative contracts and securities industry. Now let's see how blockchain technology can help trade and finance industry. The positive properties like privacy, smart contracts, and consensus of blockchain technology can address some of the key challenges faced in the trade finance sector in the areas of cross-currency payments. Blockchain technology can also provide substantial benefit in the syndicated loans market to streamline the settlement process. Blockchain has the potential to transform the supply chain industry as well, mainly from conducting payment and audits to tracking inventory and assets. Blockchain technology will enable greater supply chain efficiency than ever before. In the retail banking, blockchain technology can help move money efficiently and cost effectively between parties around the world, mainly cross-border remittances. Today, cryptocurrencies provide people across the globe with instant, secure, and frictionless money. Blockchains can provide the permanent record storage for every cryptocurrency transaction taken place. Blockchain can also add high value in mortgage verification and contracts by reducing fraud, expediting the process, and offering total transparency. Going on to the public service sector, blockchain technology could be used to address inefficiencies in the mostly paper record based existing public record system with the increased effectiveness of public services delivery by reducing fraud, increasing speed of transactions, and increasing privacy. For example, blockchain could serve as an official registry for real estate transactions, vehicle registration, or citizenship identity, etc. Applying blockchain technology to digital property management allows for a major paradigm shift. For example, blockchain technology can provide a way the artists can control their work, like ownership rights, royalty payments, and first edition rights. This is mainly pertaining to the music industry. In the next slide, we will talk about where blockchain cannot be used. Thinking that blockchain is a solution for all the business problems, blockchain is not. Here is the simple indicators chart that helps us choose the blockchain for the right set of business problems. First thing is blockchain is not suited for high performance transactions. Blockchain is not just for one participant type of applications. Blockchain is not a replicated database replacement. Blockchain is not a messaging solution. Blockchain is not a transaction processing replacement. And blockchain is not suited for low value, high volume transactions.